No, you're not investing. You're gambling, and chances are you're going to regret it. This video is for those chasing get-rich-quick schemes, thinking they can outsmart the market and catch the next big wave. If you're throwing money into something expecting it to 5x by next year, or you're using leverage and risky options, or just making short-term YOLO trades, you're not investing, you're gambling. Yeah, sure, some people get lucky, right? But for 99% of cases, there are no shortcuts. You have to put in the work. Even if you win a few times, you'll think you're a genius until the market humbles you. Today, we're going to be breaking down the key difference between gambling and investing. And no, I'm not talking about gambling in casinos and sports betting, although that's bad too. But rather these 7 common things you might call investments, but they're actually just gambling. Are you actually investing? Or are you betting your money on luck and setting yourself up for failure? I see people making reckless moves everywhere in my comments and Reddit in real life, so today I think we need to talk about it. If you recognize yourself in one of these examples, I just ask that you step back and rethink your approach, because knowing the difference between investing and gambling can be the difference between building wealth and going broke. I want all of us to win. I want all of us to be investors, not gamblers. Let's get into it. So this video might not be popular, it might get some pushback, and that's fine, because with the tools I'm about to name, there are some valid strategies for these for professionals and people who really know what they're doing or investing in, but I'd say for the vast majority of the public, and that's myself included, these might be things to reconsider and might hurt you in the future. And as always, this isn't financial advice, these are just some things that I'm going to talk about some research on, and why I personally don't like to do these. First of all, let's define the difference. I'm an investor, I'm not a gambler. And this is what that means. If you're an investor, you're taking a long-term view. You're thinking in decades. You could care less about what the market does in the day-to-day, week-to-week, month-to-month. You're investing in stable assets with your own money. You're not using excessive debt or leverage to invest, and you're also using data to win. You're stacking the odds and stacking the deck in your favor. If you're an investor, that also means you're not trying to get rich quick. In fact, that means staying as far away as possible from these things that if someone promises to get rich quick, you're running for the hills. A gambler is the opposite of this stuff. You're taking a short-term view. You're trading in and out of positions. You're trying to guess what's going to happen in a day or two. You're trying to get rich quick. You're trying to catch the next big thing. You're making big bets based on hype and not actual understanding of what you're putting your money into. You're often making speculative bets, just betting that people will pay more for the asset at a higher price, regardless of the understanding of why it's more valuable in the first place. Oftentimes, these bets are made with debt or just high risk, because after all, higher risk, higher reward, but also higher penalty. So before I started my YouTube channel, I love to watch finance videos. And during the GameStop frenzy, I used to watch this guy on YouTube named Benjamin who would just post wild investing videos showing people losing all of their money on Wall Street bets. I mean, people in these forums are literally lighting their money on fire. Like they're making crazy short-term leverage bets, turning 100K into 1K. And with some of these strategies, it might actually take longer to physically go light your money on fire. Like it would take you a longer time period than doing some of this stuff. Wall Street bets is a graveyard of people losing years of hard work over nothing. And this made me concerned about kind of the gambling culture of America and the world. So I'm going to talk about this a little bit. I don't want to participate in these things because there's no promise with anything to get rich quick. To get rich quick, it usually involves a lot of hard work and some luck, not solely luck. Like if you bought Bitcoin in 2009, you were either buying drugs online, and Bitcoin is one of the only ways you could do that, or you just got lucky that you found this tiny thing so early on that wasn't very well known, and then it became so widely adopted eventually. People are trying to catch another wave like this, like Bitcoin in 2009, to try to get rich quick with very little work. And there's a lot of speculation with many things now, and people are losing money when they really shouldn't be. Same with MemeCoins, Altcoins, NFTs. Like these are all popular right now, and sometimes I read comments of people saying like, oh, I'm down 80% in the last 2 years. And the only thing that pops in my head is how? Like this begs the question, because the stock market's done great the last few years. Which get rich quick scheme were you betting on? Oftentimes, a lot of these strategies fail, unfortunately. So let's get into a few of these things that I'd consider more so gambling than investing. This might be a hot take, but for most of us, I believe that any form of short-term trading is gambling. It's not investing, especially day trading. There are several reasons why this is a bad idea, so let's look at some numbers. Number one, you pay more in taxes on these trades that are short-term rather than positions held for more than a year. This is the difference between long-term capital gains tax versus short-term capital gains tax. So taxes eat away at our gains, which is why I love to use as many tax advantages as I can get, and holding for a long time horizon is one of them. Plus, let's look at some statistics on if this is a good idea. Studies show that 80 to 90% of day traders lose money over time. Some studies even say it's higher than this. Data shows that the longer you hold a position, the higher probability you have of success. So like, let's take a look at this study I like by Carson Group, which shows they select a variety of random time frames in the S&P 500 and your probability of gaining money. So if you hold the S&P for one day, you have a 53% chance to hit a gain. Monthly, this shoots up to 60%. If you hold for 10 years, it shoots up to 90%. And finally, if you've held for a period of over 20 years or more at any time frame, you would not have lost any money. Now, this is not a guarantee, but to me, this shows that the longer you hold a position, the greater the chances of you succeeding and winning money. So for me, this reinforces my long-term view of the stock market. Remember, we're investors. We want to play the cards in our favor. And the longer I hold these, the higher chance I have of success. And I would say my portfolio shows that pretty well, given that I have the vast majority of them gains and I've held them all for a long time. So let's get a couple things straight here. If you hold longer, you pay less taxes, and your probability of winning goes up, I'll take that. I really do hate and I'm disappointed when people say, I can guarantee you I'll give you this one trade and in 1 week it'll be super profitable and you'll make $10,000. Like, you think you're smarter than the market? For me, there's just too many variables in play in short-term trades. Like, what if some bad world event happens? What if some new politics or new political measures introduced? What if Donald Trump decides to tweet about tariffs that day? I mean, like, anything can happen. There's so many variables that go into whether a stock goes up or down in like a couple of days or a week. Early in my investing journey, I would do dumb day trades with leveraged ETFs when I just didn't really know what I was doing. So like if stocks were going down several days in a row, I thought that making a leveraged bet on the upside would be smart according to my stupid calculations. And then one day I bought some leveraged ETFs that bet on the stock market going up aggressively. And then Trump decided to tweet about tariffs that day. And like the Dow went down 1% to 2% that day and it just crashed my position. Not blaming the Donald, just blaming myself for putting my money at risk and thinking that I knew more than the market. There's also many other forms of short-term trading. If you're betting on earnings, this is a guessing game and this is closer to a gamble. Like, if you really think you know more than all the markets and the big firms with PhDs working for them, around the clock, like, be my guest. But my guess is that you don't know how to outsmart the earnings market. You don't know how to outsmart the day-to-day stock market. Like some technical analysis is valid, but overall it's just so unpredictable in the short term. And honestly, like, most people pushing this don't know what they're talking about. Oh, this chart is in like a certain shape. This is in the shape of a dinosaur. So obviously once it breathes fire, the stock's going to dip and then you can make money on puts. Just be careful with short-term trading. For most of us, staying away from it might be a good move. Here's maybe another controversial one. We're going to talk about options trading. I'm going to say some options trading is gambling because there are many valid strategies with this, hedging, generating income. That's definitely fine. I get that. But if you're options trading, you really need to know what you're doing. For the most part, options trading should be used by professionals, hedge funds, high-frequency trading firms, and maybe individuals with a lot of experience who know what they're doing, not for most normal people like you and I. People often see options trading as a way to get rich. Don't rely on this to get rich. See Wall Street Bets for examples of people losing their life savings with this. Like, lots of it is short-term leverage trades, so I stay away from this because I like to enjoy my life, and I think most normal people should. This kind of goes back again to, with all the variables in the world, do you really think you can predict what's going to happen in the short term? I know I can't. This kind of leads us into the next part, which is trading with leverage or debt or just money that isn't yours. Like, this is kind of an expansion on options trading, but as a rule of thumb for almost everyone watching this, don't invest with money that's not yours. It'll help you sleep at night. Margin, debt, I like to stay away from this stuff. If you're trading with leverage or investing with leverage, yes, you can get bigger gains, but also you can get bigger losses. And it's not the thing to be doing in unpredictable times, in my opinion. This is how you put yourself in an awful position. I would not do this. If you're going to do dumb and risky things with your money, at least do yourself the service of losing your own money, not money that you owe somebody else. That's a great way to get in a lot of debt. So next we're going to talk about altcoins, MemeCoins, and NFTs. I don't know why I have to explain this one because the vast majority of altcoins and MemeCoins out there are speculative. Like, they're not really concepts that have been proven out or successful. And many MemeCoins are just designed to take advantage of people who don't know what they're buying. Like altcoins, sure, yeah, there's for sure a lot of valid projects with real world use cases, but that's like a few coins out of thousands. So like, to me, there's a big gambling component to this. I'm still also trying to understand the use case for NFTs. Like the technology's cool, but in terms of investment, there's a lot of room for uncertainty there. So for now, I'm staying away. The percent of people who lose money betting on a lot of these cryptos is too high. Like for me, I'm sticking to the tried and true coins. Like I only have Bitcoin and Ethereum, and I haven't bought or sold in years. And even then, it's like 5% of my portfolio, maybe. Like it's not a high percentage. People seem to view crypto as a get-rich-quick thing because of the riches that Bitcoin and Ethereum and a few of these coins generated. It's not a get-rich-quick scheme, and you just need to stop looking for these because the people in crypto who have gone broke trying to get rich quick far outweigh the people who actually got rich quick. Also, only betting on crypto is a huge risk. This reminds me of the next gamble I'm going to talk about, which is putting too many eggs in one basket and not diversifying enough. The amount of people in my comments who I see who are going all in on something, they're going all in on Bitcoin or just anything, like it's concerning to me. Like that leaves the door open for devastating loss if you have all your money tied in one thing. In my non-professional opinion, spreading yourself out is not a bad idea. Like if you're too concentrated in one stock or crypto or one industry, it's not a bad thing to look into exploring diversification. I remember a story with my dad. He was an early employee at a company, and because of this, he got a large amount of stock options at this one company, and it happened to be a tech company that was going up and down and very volatile. And he wasn't very diversified. He often says he wishes he could have sold a little bit more often to just diversify, because there were a few times when earnings came out and the stock tumbled and his net worth just took a hit because he was too invested in one thing. I like buying ETFs for this reason. It forces diversification, looking at industries, different things like crypto as well. Throw your eggs around, which this sounded weird, but you get my point. Some people find success not diversifying, and that's fine. It's all about understanding your risk and protecting yourself by buying different unrelated things. Now, I don't agree with Warren Buffett on everything, but this is one piece of advice from him that I love, and that's you shouldn't buy things without at least a basic understanding of how it's going to make you money. I see so many people blindly throwing money at things, and then if you ask them about the investment, how it works, how it's going to be more valuable in the future, it's clear very quickly they don't get it, and that's a problem. They just bought something they saw on the internet or Reddit. Like look into these things. Look at the history, the technology, how it works. Don't just buy something because in 2 months you think someone's going to buy it at a higher price. Like, why is it going to have more value in the future? Is it producing income? Is it a business? Is it a crypto? Like, what software do they use? Will it be used for more transactions? Like, look into all this stuff. Think about these things and understand where you're putting your money, or that's a gamble. So the seventh and final gamble that I'm going to talk about is a little bit of a different type of gamble. So let's say that you are interested in these kind of safe long-term investments that I've been talking about. But let's also say you don't have an emergency plan. If something happens, or if you're using money that you can't afford to lose in the short term, you're gambling on the fact that your life won't have surprises. You need a contingency plan for when things go wrong. Several times in my life, something came up and I didn't expect it. I remember one time my car was having issues. I took it in and they said, this one's going to be ugly. And it was a several $1,000s repair. It was not planned at all. Could be a medical expense. I've had 3 surgeries in my life as well, all unexpected injuries. And even when things go right, let's say a friend's getting married, boom. Now you have to drop $500 to rent a suit, plus the hotel and travel expenses. So stuff happens in life. You can't plan for everything. Investing your spare money without an emergency plan can be irresponsible. And it's a gamble that stuff won't go wrong in your life. And stuff will go wrong. That's a fact. Things will come up that cost you money. So have a plan for them so that you don't go into debt. Because investing can wait if you don't have any cushion, because that should be your priority. Now, here's a bonus one, because some people out there think it's viable to make money through actual gambling, sports betting, casinos, poker, etc. And to be fully transparent, I do enjoy these types of things in moderation. I like to play blackjack. I like putting $5-10 on a football game. But I gamble maybe a few times a year, and with money I can afford to lose each time. I'm not going into a situation like this expecting to win. You shouldn't think that you can beat the casino or beat the sports books over time. It's just not likely. Doing any of these with plans to make it into an income stream, it's not realistic. I mean, the casino payout ratio is low. It's low on slot machines. Even on games like blackjack and craps that are higher probability, it's rigged against you. Sports betting, also rigged against you. Very hard to beat the odds over time, and the bets that they offer are heavily biased towards them. Plus, sports is just so unpredictable. I prefer the stock market, betting on American businesses to make money for me. Remember, we want to play games in our favor, not ones that are biased against us. So what should we do instead? Well, I'm not here to tell you what to do. Simply to just be careful. And I'll share for the 120th time what I love doing, And that's that, American stock market has beaten a lot of people. Just following the S&P has beaten, 90+% of people actively trading money. I trust the long term. I love the stock market. It's paying me dividends. I'm diversified. I'm not buying and selling repeatedly. I'm buying and dollar cost averaging. I'm also using money I don't need right now, and I have some minimal other positions in some unrelated assets like crypto as well. I don't want to beat the market. Just simply keep up with it, because honestly, I'm humble enough to know that I'm not smart enough to beat the market over time. Yet the market itself is fine. I don't need to get greedy. So be careful investing out there, fellas, and make sure that it's actually investing and not gambling. Until next time.